Another management. Indian Bank reported a stellar set of numbers in the quarter gone by. Let's talk to the management about the quarter gone by and the asset quality concerns. The stock definitely is reflecting the good numbers they've delivered. Padmaja Chunduru, the MD and CEO of Indian Bank, joins us right now. Well, ma'am, Q1 has held mixed outcomes for the banking sector with increased frequency of stressed assets. There was rising borrowing costs. But what, in your opinion, were the key highlights for your bank's performance this quarter?
Yes, I think Indian Bank has posted a very strong quarter, Q1 1920. Not only on the business parameters, but also the profitability, the income, and also the asset quality. The overall business growth has been 14% year on year. Both the deposits and advances grew by 15% and 12%. Not only that, the operating profit has grown by 6% and the net profit posted a record growth of 75% year on year. Now it is 365 crores vis-a-vis the 209 crores of last year. More importantly, the return on assets has come back to 0.52%. And the return on equity is now 9.06%. This has been helped by the asset slippages arresting and also the recovery that was strong in the current quarter. Nothing from the NCLT or the big accounts that are in various stages of resolution in the NCLT or in courts, but actual recovery on the ground through the smaller accounts. Also, the capital adequacy ratio has seen a huge improvement in terms of from 13.21 to 13.62%.
NPS saw a rise in this quarter as in case of other banks. Could you tell us about the overall asset quality slippages? What does this envisage for the rest?
The book is well diversified in terms of the retail, agriculture, MSME being now 60% of the portfolio. And the stress in those segments is under control. MSME, even today, the NPA is around 5.5%. Even giving in for some kind of a stress there, I think that is manageable given the ramp up we are seeing on the interest income and the other income. The other part is about the agriculture. We have about 2.5% NPA, and retail is about 3%. But that is more so because of the education loan portfolio, which is a small portfolio that is adding up to the stress, but that is under control. And
NII was also slightly compressed on a year-on-year basis. Can you tell us what the primary cause was for this and what is the outlook for the rest of the year?
The net interest income has been a little down compared to last year. There are two things we need to consider here. One is that the interest income has grown 10%. And interest expenses, however, have gone up by a bigger proportion, that is 16%. This is partly because of the ramp up that has happened in the deposit side, 15% growth on deposits. And partly those deposits have come from the term deposits category, which normally means a higher rate of interest. And that cost has come onto the balance sheet. The other portion is that there was a 145 crore interest write back in the last year, June quarter, which was the Bhushan Steel recovery that happened in the Q1 of last year. So adjusted for that, actually there is a growth in NII. However, even taking that in our stride, I think going forward, the interest expenses will be more than offset by the interest income. And we are trying to avoid the higher cost deposits through the purchase deposits or the CDs and relying more on the core deposits, so that is the term deposits and CASA. CASA, though there is a growth in the absolute level of CASA, there is a slight dip in the ratio, that is 33.4. I think that will see improvement in the coming quarters with our opening new accounts both in SB current account and also government accounts.
What are we targeting for loan growth? What is the kind of loan book that you will compromise on? What is your guidance on the NIM front?
Loan growth last year was very robust. It was almost 18 to 20% through the RAM sector. This year we expect and we have projected a growth of about 15 to 16%. And more so in the retail, agriculture, MSME, it would be around 15-16%, and in the corporate book maybe 12 to 13%. And the going forward, I think that sort of growth is possible, and we should be able to register a steady growth.